If you are wondering for how long Dubai property prices will keep rising, when will the Dubai real estate market slow down, or when will the prices start decreasing, then these are the questions everyone wants to know. A lot of you are thinking whether investing in Dubai real estate currently is a good decision or not. Is the market probably a bubble in the making with an oversupply of properties? If you are unable to get the right answer after watching all the related videos available on YouTube, then you have come to the right video. In this video, I will help you understand how the future of Dubai real estate market will look like in the coming years so that you can take the right decision of when to buy or sell. I will cover lots of real estate data, statistics, forecast, trends, and hopefully none of the fluff that salespeople throw. My name is Ankit. I'm an experienced consultant based here in Dubai, helping my clients with the sound, data-driven investment advice related to buying real estate. And for all the deep analysis of projects, communities, and trends, you can subscribe to the channel. What you see on the screen is a historical timeline of the average Dubai property prices since the year 2008, presented by Property Monitor. The average property price in January of 2008 has been indexed to a base value of 100. And if you start looking from 2008, you see that the gold rush era of Dubai, the prices were speculated to reach 170 by September of 2008, which was a 70% increase over just 7 months and was surely bound to fall back to correct itself when the Lehman Brothers collapsed and the global economic crisis started. After the market busted in 2008, it started to rebound back when the government learned its lesson and started to take measures to improve real estate regulations. Then from 2009 all the way up to 2014, a span of 5 years, is when the prices picked up and peaked again to the same levels of 2008. After 2014, the market witnessed a very slow and long period of 6 years of price correction that brought it back again to its base index till the year 2020 when COVID hit the world. And since November of 2020 until now, we have seen a consistent price growth of about 15 to 18% on a year-on-year basis for almost 4 years. At present, we are at the highest ever peak of the Dubai property prices, which is about 195 in this price index in July. Now the billion-dollar question here is, how long will this price growth trajectory sustain? When will there be a dip in the prices, as we all know that real estate works in cycles? So there should come a correction sometime down the lane. Let us try to find an answer to this burning question. Now, how does property prices work? It is very simple: supply and demand. Let's first study what is the supply here in Dubai. I'm going to pull out the data from the Dubai Land Department via dxbinteract.com. I have put all the links of these publicly accessible platforms in the description so that you can look into it as well. If we see the past few years, the number of new properties added to the city every year, it has been around approximately 30,000 to 35,000 units. Now the actual delivered units can be counted easily, but what about the future supply for the upcoming years? These are numbers we can only estimate, as it will depend and vary from developer to developer, area to area, as well as contractor to contractor, how fast they are able to finish the projects and hand over the units to the city's supply. Here is one key indicator which can help us estimate some figures of future supply. If you see this chart here, which is highlighting the property construction progress of all the projects which are under construction in Dubai, these are the number of units respectively in the specific construction progress range. Generally, a project takes approximately 4 to 5 years to complete. So from the unit numbers in each construction progress stage, we can roughly estimate how many units will be completed every year in the following years. Here on the screen, you can see those estimated numbers until 2030. The supply of new units will stay around the same range of 30,000 to 40,000 till the year 2028, keeping market prices to continue going upwards in the same trajectory, and by 2028-2029 is when the prices may start to correct a bit in certain areas and categories of Dubai. This is what a lot of analysts are also predicting. But one thing to note here is that a lot of the market is actually controlled by the semi-government developers in Dubai. We would see developers making strategic decisions along with the government to control the supply of delivered units to maintain a healthy balance between supply and demand, and a stability in price levels going forward. Another thing I would like to add here that the real estate market is massively spread out across different areas and different types of properties, as well as at different price points. So making a generic statement about the whole Dubai real estate market is irrelevant. We can never actually conclude that the entire market is oversupplied or undersupplied. What is more appropriate to say is that an area is oversupplied, or a particular type of property or properties in this price range are undersupplied. So whenever we are trying to conclude about the supply in the market, it is important to deep dive into each of the different areas and categories to get a much stronger estimate. Here on the screen, you can look at a quick snapshot of the future upcoming supply in Dubai per area, where the top 3 areas being JVC, Business Bay, and Dubai South. Now let us try to understand the demand side of the equation. Demand of properties from buyers and tenants. From the perspective of buyers, it is key to note that the Dubai real estate has a huge international buyer market who are pure investors. They are basically buying the properties to rent it and eventually gain appreciation of their capital. As per reports, non-resident investors accounted for 42% of the new investors entering into the Dubai real estate market in recent years. So to understand the demand for occupying properties, it is key to track 3 key figures. Number 1, the number of people willing to settle and live in a property. Second, the number of people willing to rent the property as a tenant. And the third, the number of tourists visiting the city and occupying properties on a short-term basis. For this, firstly, we will look at the population growth of Dubai. Increasing population figure is a good indicator for increasing end use of homes as well as rental demand by tenants. The current population of Dubai is estimated to be at 3.75 million in 2024, which has been increasing at a rate of 2.5% in the past few years. Although Dubai's population has previously increased in some years to almost 10%, but even if we take the same rate of 2.5% increment as an average on a very conservative basis, Dubai population will touch almost 5.5 million in the year 2040, which is quite close to the government's 2040 Urban Master Plan's population target of 5.8 million in 2040. So the government takes a key role here in maintaining the demand levels to keep a consistent population growth by attracting people from all across the world to move to Dubai for job opportunities, new businesses and investments. And they have been quite successful in this so far by introducing the Golden Visa program, easier residency schemes, low taxation, and investment into other sectors such as education, healthcare, finance, and AI, which will contribute to the future GDP growth. Another key indicator to note is that of the recent hike in rental prices in Dubai, which are up by 22 to 23% on a year-on-year basis, solidifying that the demand is more for renting residential properties than the supply of available rental units. And talking about the tourism in Dubai, the Dubai's tourism sector has hit new records this year 2024 as the emirate welcomed 9.31 million international overnight visitors across the first 6 months of 2024, registering a 8.9 increase on the 8.55 million logged in visitors in the first half of last year 2023. So all these are very positive indicators, and these numbers of ongoing rental prices and the number of tourists visiting is what we should be tracking regularly to understand the health of the underlying demand of real estate. Now, where is the conclusion heading? Are there any upcoming signs of trouble? Let us look at what is UBS, one of the world's oldest and prominent investment bank, is saying. I'm going to talk here about the UBS Global Real Estate Bubble Index report, which was released last year in 2023. On a study of select 25 key cities, Dubai was ranked as fairly valued with the reputation as a geopolitical safe haven that has triggered a surge in demand for both renting and buying. It mentioned that the market for owner-occupied housing in Dubai started recovering in 2021. That means more of end use of properties. As per the comparison, it was one of the best city along with Miami, where only 15 years is required for the rent to pay out for the cost of an apartment. Just imagine. These number of years being the least for any city on this study across the world. The report says that the prices have been booming since 2021 and increased by 15% in inflation adjusted terms between mid of 2022 and mid of 2023, and the highest growth rate among all cities analyzed in the study. Price increases in the luxury segment were even stronger. On a cautionary note, it also mentioned that an ongoing strong expansion of supply, particularly of apartments, is also likely to limit price growth, and the market outlook remains dependent on geopolitical developments. Well, what we have seen historically is that geopolitical tensions around the world have in fact helped the Dubai real estate market, increasing the number of transactions as we see increased migration to Dubai for safety reasons. This is what exactly happened after the Russia-Ukraine war started. Going into the future, we need to track the key economic recession fears, as any large-scale global recession, like to the levels of 2007-2008, can impact flow of money across the world, which will deter the foreign investment flow into the Dubai real estate. And similarly, oil prices and currency fluctuations can also impact the market a little, as we had seen this before in the years 2014 and 15. Now you have three options that you can choose. Either you buy a property now and watch its value increase in price, or you buy a property when you see the prices are falling and then watch its value decrease in price, or you just wait and track the market going forward by the indicators I have mentioned in this video. If you would like to discuss with me more on this topic, feel free to contact me on the mentioned number. If you have any questions or concerns regarding the outlook of the Dubai real estate market, then feel free to drop in your comments below. And if you would like to see such insightful content in the future that can help you educate and track the real estate market, then don't forget to subscribe to this channel. This is Ankit from Experience Realty, signing off.